Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, I'm going to show you how I'm going to start a dividend portfolio under $100. Hopefully it will inspire those that are thinking about starting a dividend portfolio. I want to show you that you can start with as little as less than 100, and eventually with patience and researching the companies that are great and consistency, you will create a dividend portfolio that will have higher payments than you can possibly imagine. So hopefully you like this video. Please give it a thumbs up. Sit back, enjoy it. Please remember, it's not financial advice. This is just me sharing. Without any more delays, let's take a look at these three companies that I'm going to start this dividend portfolio with. So the first one is STAG Industrial, ticker symbol STAG. For those of you that are not familiar, it is a real estate investment trust focused on the acquisition and operation of industrial properties. So they have about over 500 buildings in 40 states. You can see the square feet and all that stuff. So take a look at this if you're not familiar with this. I know a lot of investors that are dividend investors. Usually this is one of their companies that they like to invest on. For Simply Safe Dividend, based on their dividend safety score, they rate it as 45, which is borderline safe. The dividend yield is 5.33. It's a mid cap, and here's the beta. Now, if we look down to some of the key metrics, you can see payout ratio 78. Dividend streak is only 10 years without a reduction. And you can see here the last 10 years, 7%. The last 5 years has been really slow with 1%, which is very slow. And then the latest is very slow. Dividend year, 10 years without a reduction, 10 consecutive increases. What I really like about this, and I am really a buy for me, is the monthly. I think I love monthly companies, and this is one that I really like. So your annual payout would be $1.46, which monthly breaks down to about 12 cents per share. So if you look over here, dividend yield is above the 5-year one, and then you got a PE ratio. Again, I always like to buy companies that are low. As you can see, it is close to the 52-week price range. So the low is 26 at the time of this video. It's at 27, and then the high is 47. So definitely buying it really cheap right now. And then you can see a little bit more information on there. Investment return capital 3%, return on equity 7%. Looking over to tip ranks, you can see a strong buy with 38, the price target, 41% upside. You got your high of 45, 38 is the average, 35 is the lowest one. Yeah. And then if you look at the analysis, you can see outperform, and then you have your bullish sentiments. You got hedge funds have increased their shares. So if you look over here, hedge funds have increased their holdings by 45 shares last quarter, and they're positive. Looking now to NASDAQ, you can see their analysis rated at a strong buy with 9. And then you got all these guys, JP Morgan. And then pretty much the price target is at 45, average of 38, and then the low of 35. And then if you go to Webull, based on 12 analysis, they rated also as a buy. 41% says it's a buy. And then your price target of 45 as a high, average of 38, and then the low of 33. If you're wanting to start your dividend portfolio, you can also try Webull. You can get up to 12 free stocks when you open and fund the new account. So there's a link in the comment section, so check it out. And the next one I want to talk about is Coca-Cola. So this is a beverage company, another solid staple company in my opinion. Definitely one that, in my opinion, should be in everybody's portfolio, because pretty much everybody uses their products at one point or another. It's pretty much everywhere. If you look at Simply Safe Dividend, based on their dividend safety score, they're rated as 80, which is safe. Your dividend yield is 3.23, and then here is your beta. Market cap is mega cap. And then if you look at the key metrics, dividend streaks of 102 years without a reduction. They've increased their dividend, 70% payout ratio. And then the last dividend growth, last 20 years, 8, last 5 years is 4. And then this is where I love it. Dividend streak of 102 years without a reduction, 59 years of consecutive increases. And then you get your payout details of quarterly in the months of April, July, October, and December. Annual payout is $1.76, which breaks down to about $44 per quarter. Yeah. Now, if we swing to tip ranks, analysis rated as moderate buy based on 2. Price target is at 66, 21% upside. High price target at 69, 66, and then 59. Now, if we go to the stock analysis, you can see outperform of 8. You got all these other things, but the hedge funds have decreased their holdings in the last quarter. Now, if we go to NASDAQ, you can see based on their rating, there's 17 of them rated at a strong buy. And you got to get like Citibank, JP Morgan, Wells Fargo. And then if you look down, high in the 76, average of 67, and a low of 59. Now, if we swing to Webull, you can see that based on 28 analysis, they rated as a buy. 60% said it's a buy. And then you got your price target of 76 in the high, 67 as the average, and 59 as the low. The last one I want to talk about is Walgreens. Ticker symbol is WBA, and I usually shop in here. It is a healthcare and retail company, so you can see you can get your medicine, you can get all these other stuff as well, photos and everything. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they're rated as 79, which is safe. Your dividend yield is 5.89. You have a large market cap, and then the beta is right there. And then if you look at the key metrics, payout ratio 35, recession dividend has increased. Check this out, dividend streak of 90 years without a reduction, pretty solid. Last 20 years 14%, last 5 years 5%, and you get your average. But look at that, uninterrupted dividend streaks of 90 years without a reduction, 46 years of consecutive increases. And then you get your payment details, which is March, June, September, and December. Annual payout is $1.92, which breaks down to about 48% your share. Yeah. Now, if we go to tip ranks, their analysis rated as a hold, and then their price target is 37 with 13% upside. The highest is 38, and then your low is 36. Now, if we go to the analysis, you can see neutral, and then hedge funds have decreased their shares as well, yeah, last quarter. And then if we go to NASDAQ, their consensus based on 16 analysis, they're rated as a hold, and you got all these guys, Morgan Stanley, UBS, Zacks Research, and then their price target is pretty similar, high of 38, 35 is the low, and 32 is the low, and 35 is the average. Now, if we go to Webull, based on their analysis, 20 of them they rated also as a hold. And then you got price target of 45, average of 39, and then the low of 32. So if you look now we're going to swing to Robinhood. You can see my recent history. I did buy Coca-Cola. I didn't buy a whole share yet, so that's something I'm going to eventually buy. These are just options that I did, and then I sold it, which is Geo. But I did buy Walgreens 1 share, and then STAG Industries in 1 share. So I wanted to show you, and the purpose of this video is to show how you can start your dividend portfolio. So if you look at the start of this portfolio, it is $71. So these are the stocks. So eventually what I'm going to do is slowly build these stocks to about 100 each, and once I reach maybe 10 or 20 for each, then I'll start adding more companies into this dividend portfolio. Hopefully by showing you this, it'll inspire some of you guys that want to start their dividend portfolio, but not sure how. So definitely enjoy. Again, this is not financial advice. This is just me sharing. With that said, thank you so much for watching, guys. Hope you liked this video. Please give it a thumbs up. Also, if you haven't done so, subscribe, hit that like button. Don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. If you're interested in other dividend companies, there's videos that I put out as well. All right, guys, take care. Appreciate you guys. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Bye.